Hello traders, Mark Keyworth here once again with Flipside Trading, and here to take a little time out of your weekend to talk about the market. So thanks for spending some time with us. And the agenda is as follows, right? We're definitely neutral to bullish, but market breadth is waning. So we'll talk about some of the key factors we can look at to determine if that's going to be a problem in the long term. We'll take a look at the new economy. We're still kind of rocking and rolling there. And of course, the trade of the week. Which is MDB. At the same time, we'll also go back and look at Adobe and look at that trade as well. So let's dive on in. Here we go. Okay, so here we are. We're on looking at the SPX, the S&P 500 daily cash chart. And you can see that we very much have been, in this slow grind upward. And as part of that slow grind upward, you can see that the average true range is getting smaller and smaller. So what usually happens is that you get kind of this range contraction and then boom, we'll get some type of range expansion. So, at this point in time, we're still moving up where you can see that we're holding the yellow line here, the 80 EMA. That's great. We still have the stack above the 21. We're following the trend line, and of course, that's above the 50. So basically what we're looking for at some point in time is some type of push or catalyst to, break us out and above. So if we do get that catalyst, where might we go? So the best thing to do is let's take a little bit closer look. And if we really talked about, where this might end up, is Symmetry is the best way to think of things. So if we come here and use our Symmetry tool, I'm going to take a look at what this range has been and then compare it to here, and that'll give us a good idea of what potentially or where potentially SPX can go. So if we come here, we go to add a drawing and we go to fig extension and we take this range and then we add it down to here. Let's get it right there. There we go. All right, so basically what we're looking at is kind of this 3484 level, just below 3500 as kind of a good target if we do get a breakout here above 3400. So that's kind of a way to think about that. But again, we're going to need some type of catalyst. Now, when we talk about catalysts, I mean, in the news today, and I'll go over here, it's talking about how Trump has reportedly announced an emergency authorization for the coronavirus plasma treatment. So the key thing is when we talk about that treatment, basically what this says is that they're going to take plasma from folks that have already been exposed to COVID-19 and have antibodies, and then pump those antibodies into patients that have basically tested positive and or showing some, if you say, adverse symptoms. Well, at this point in time, two things. Number one, this study really hasn't been totally proven. It might potentially be a little rushed. So I'm not going to get into the politics of that. But also that effectiveness, I think, is really, there's some amelioration to it. I think it may help the overall, death rate to some extent. But this is not a vaccine. This is not an overall mover, if you will, that I think is going to really, shake up the market. So even though it's happening tonight at about 4 p.m. Mountain Time, this isn't the catalyst we're looking for. It really has to be in the form of a vaccine. So if we take a look at that, and now we also look at the NDX and the NASDAQ, and as you know, the NASDAQ has been powering. You can see that the average true range has been moving down a little bit. You can see it here. We have this kind of downward movement, but we're still pumping up, especially Apple and Tesla have been driving the market. You can see that we have the top of this channel here, which is, depending on where it hits, kind of this, 12,000 level. But again, if we take the overall kind of idea of where we're going to be from a Symmetry perspective, and we come down here, and we say, if we go from here to here, and then we pop that up to here, the 100% at 1187 and the 1.27 extension gets us right around to that 12,000 level. So those are two good areas to kind of mark down to as we move up to tighten stops and potential targets, especially the second one, as it really has a nice confluence with the channel. So that's something to think about. Again, you can see that, we're holding the ADMA. We're holding, the 21 EMA basically corresponds with the bottom channel and of course with the 50. So we're still up, moving bullish. Now, if we look at the rut, which is of course our small caps, you can see that we've had a little, pullback, but again, only to the 21, EMA. Again, you can kind of consider this in some senses a kind of a bull flag, right? Based on something here, and you can get a breakout. So I'd watch this breakout. I think that if we get this breakout in the small caps, I think that'll kind of serve as a catalyst, if you will, for the S&P and the NASDAQ to hit the targets that we're watching. So that's one key level to watch for sure. Okay, again, kind of our underlining, should we say our broad market internals, you'll see that financials, look, the financials are they're weak, right? And they're weak because basically interest rates are low. And we take a look at interest rates, we're still moving down. And when we move down in interest rates, well, the banks don't have the ability to arbitrage and make money on any type of a loan. So hopefully, if we want to see that happen, we're here at the 21 EMA. Potentially, we'll see a bounce that'll pick up the financials and help things moving forward. Now, if we look at bonds from the other asset classes, you can see that bonds are starting to move up a little bit. But, again, until they really pass this 50% retracement, which would be, let's go to this level here, then I wouldn't say that it's really something to be concerned about as far as the correlation between bonds and stocks. And so let's see if we can get here we go. Get things to cooperate here, and if we start from here and we bring it back over to here. So that 50% retracement is right here at the VPOC line around 180. So if we hit 180, then I think we could, potentially, be, part of this, higher high, lower low type of a trend on bonds. But until we hit that point, I don't think that's where we're headed. So, and then we take a look at oil. Oil again is pretty much moving sideways. It also has a lower ATR, and until it really breaks kind of this 43 level, then I don't think that we're going to see those weaker sectors, i.e. financials and i.e. energy, really perk up to, help balance out the market breadth and getting where we need to go in order to, make this a real robust type of move higher. And then, of course, we'll take a look at copper. Copper has come back down. It has pulled back. It's something to keep an eye on. We've come right down here to the 21. In the 8 and the VPOC here. This is the regular POC. And so let's see whether or not this holds. If we start to get things moving down and it really breaks this bottom of value, we still have the 50. It wouldn't be something I'd be too worried about, but I would definitely on a day-to-day basis, if I see, copper down, I am definitely, should we say less inclined to put on a larger type of a swing trade. We look at high yield bonds, which is also a good idea of what risk reward is. You can see that we've come up here. We had a bearish divergence. We pulled back and now we're up. We're back up. We're back up the value area. So it seems to me we could be moving a little bit higher from a risk on perspective. And of course, last but not least, the transports. The transports again are really right now parroting the SPX, and what you have is this kind of consolidation. So again, I think they're looking for that pop. So again, transports, energy, and the financials, and the small caps, if we can see them break out, I think that would really confirm something moving forward. And so one of the things that everyone's saying is this a top? So let's go back to the SPX again real quick. And my answer is no. Why? Why would you consider this a top? And this from the perspective of we're still holding the moving averages, right? We talked about that. And, at this point in time, when you see a top, what you usually see is some type of exhaustion. So if I saw like one or two big candles and then an immediate, kind of pull back and plunge, that would kind of give me another signal that this would be a top. But tops are usually a process, so I just don't see anything from a normal topping pattern behavior that would say that we're there. But the question is, how strong is this move? And so when we look at strength, we really want to talk about market breadth, and we'll go here to another charting platform that I really like on stock charts. So what we have here, you can see in the upper quadrant this is the S&P 500, and you can see we've been making this great move upward, the steady grind higher. And what we're looking at here is basically the momentum oscillator for market breadth. And you can see that we're making kind of these lower highs, and we've kind of broken this overall support line. We have not gone below zero. So what is it? It's kind of a watchword. It's basically saying that we still may be in for this longer term grind with a short ATR, and we're not going to go ahead and just jump right up to that 3,500 level that we were talking about earlier. So at this point in time, until we kind of see that turn up, I would not expect the market to move with should we say any urgency on the bullish area higher. And part of that too is the summer doldrums, so that's one thing to expect. So that's the S&P 500, and then we'll go ahead and take a look here at the NASDAQ, because as we know, right, tech has been our overall driver, and you can see more or less the same type of thing, right? We have these lower highs, kind of moving down here. We're here at the zero line, and it's saying that there's that momentum from an overall breadth perspective is definitely slowing down. So even in the tech area, which says, okay, again, I really, unless something newsworthy happens, I wouldn't expect to see a big breakup, a big jump into kind of new highs in that 3,500 area. And then, of course, we take a look at the broader market, which is the New York Stock Exchange. Remember now, this is about 3,500 stocks. This one is showing a little bit more health, a little bit of sector rotation, i.e., you're seeing your home builders and your industrials, doing a little bit better. Even though we still do have a lower high, it is not as, should we say, dire in the depth, right? It's not down here flirting with this zero level. So this kind of pretends some hope. And I think that maybe one thing we need to look for is some more rotation, right? See if we can get more rotation into, those two areas that we talked about before. So, something to watch, and I think that we're in decent shape. If we again, take a look at our overall dashboard, well, again, we'll take another look at kind of a market breadth, right? This is our McClellan indicator. I love this one. You can see that we're right here. Looking at the ADMA, we haven't broken that, but if we do break it, it's something to think about. But this then also kind of corresponds and says that, we were right at the zero level before in the market breadth oscillators. So again, you consider the EMA kind of the zero level. So this gives us a good, another way to, should we say, corroborate, I should say, that, where we are from a market breadth standpoint. So it makes me feel pretty comfortable of where we're at. If we take a look at our next chart here, again, we look at our advanced decline, and you can see what happens. Our advanced decline came back into the Keltner channels, right? The way we read this is that when we bounce out of the Keltner channel, okay, right here, that means that there's probably a good sign and indication that the market's going to move higher. But what do? We pull right back, right, to kind of mean reversion to, this is the 20, or I think it's the 20 moving average. So again, let's keep an eye on it. If it breaks all the way back through the Keltner channel, that's something to consider. But let's see if it bounces out. So again, now we have another, should we say, signal to look at. We talked about, kind of our internals and the rut, breaking up. If we can get the same thing from our financials and our energy, and also breaking out with our transports. If we can break this Keltner channel again, it gives us a good thing to watch. So let's keep an eye on that one as well. And if we go a little bit further from our dashboard, and again, this is kind of another market breadth. And market breadth again, it's coming down. There's no doubt about it. But again, we're above the 50, so we're in good shape. Sorry, that was the wrong list there. Our on balance volume, hey, we're still above the 50. Okay, we have hooked down, but we're still above zero. Again, we're kind of in the watchword and saying that we're in weakness, right? Everything's saying the same thing, and that's good. And it's good because we're getting the same message from multiple viewpoints and multiple different technical indicators. And even on the NASDAQ, the bullish percent, I'm sorry, I'll go back to that. Here it is. On the bullish percent, you can see that what we've done is we're pretty flat, right? We're in this kind of a channel right here, and we're moving sideways, but we're still above the moving averages, so we're good. Now, one thing to watch is, kind of on the worldwide basis, and I think, in association with copper, is again, this is our Baltic Dry Index, right? This talks about shipping and moving of trade goods, around the world, and we're coming right up here to this first cut on the 50 moving average, and breaking that is something to watch. Okay, so let's see what happens there. Right now, we could bounce, but overall, I think we're relatively healthy. So I think again, it kind of really pulls us back into what our market forecast is, right? Neutral, to bullish. There is one other thing to watch, and that was the employment figures this week. In the sense that we went back up above a million, i.e., we kind of had a minor inflection point from kind of $800,000, $900,000 level. And now we have, kind of new claims, and that kind of, tracks with basically all the unemployment, subsidies, going away, kind of the PPP. Also, dragging out. So that's going to be, something to watch. One data point doesn't make a trend, but we'll keep an eye on that for you over the next couple of weeks to see whether or not that's going to have a broader effect on the economy, and then maybe ultimately the market. Because remember, the market is not the economy. So let's be sure that we keep those two things straight. And last but not least, let's get to our trade of the week, and let's go back to our charts here. And the trade of the week that we talked about last week, so let's just see where we're at, and that was Adobe. Adobe, it actually played out very well. Remember what this was? This was kind of we're trying to play the run up into earnings, and the earnings were scheduled for, September 15th. And as you can see, boy, I tell you, we had tremendous problems this week with Thinkorswim and their data. So I'm just going to pause it here until Thinkorswim decides to play nice. And here we are back. So let's take a good look at this. And what we said is that the overall trigger to get into this trade was to basically break above this value area. And that's exactly what we did. Our first target was right here, and we hit that like within the first day, so that was awesome. A little bit of a pullback, and boom, we hit our second target, which is the previous, all-time high, and we moved up here. So now, where are we and what should we do? So personally, what I have is my stop is right here. You can see that we have resistance, which gives me a better than break even, and let's see whether or not we can take this a little bit higher. And so let's try to figure out what some of those targets are. Again, we'll go back to our fibs, and if we go back to our fibs and we add that drawing, and we'll go to the extension first, and what do we see is that we're at the 127, but the 168 up here at 486 is a good place to take one more target if you have it, or else if you have that target, if you don't want to take a target, what I would do is, let this run a little higher, and I would probably put my stop just underneath this high, depending on what the candles look like. So that's the way to, take this a little bit further. So hopefully, folks are, got a good education, and potentially they've applied that education and have profited from that going forward. So what do we want to do this week? We definitely want to, look at our trade of the week, and in this case, it's going to be MDB. And MDB is one of our SaaS stocks. It has earnings on September the 2nd. I think that it's in a good spot here in the sense we've had some great range expansion, but we had a little pause. And so what I would set up is the trigger to break this high, which is also the POC. So that means that we're getting outside of this most traded volume area, and I would put the target up here at 232. Now you can take an interim target here if you want, kind of in that 227 area. So that would be the way I play it. I would play this with a call credit spread, and I would do that. Let's go ahead and take a quick look at what that may be. So it is September 4th, which is a Wednesday, and I really don't like, playing these options the week of earnings, because as you can see here, right, look at the implied volatility. The implied volatility is at 76, and that as soon as earnings is over, it's going to drop back down. So, it just makes the options, I guess, more expensive and more overvalued. And if I only went to, August 28th, there's a couple days that we're kind of leaving on the table. So even though it's a little more expensive, I will be playing this if we get the trigger, right? No trigger, no trade. And looking at kind of a 220, 230 / even, 235, type of a call credit spread. And that's going to run you about, $3.60, a piece. So that's kind of a pretty good risk reward, right? Remember our max profit, if it's at 360, we're going 10 wide. That gives us about $6. Usually what we kind of do in looking at these as far as taking profits is not only looking at where we are, from where we're kind of achieving, should we say, stock, delta, i.e. these targets here that we just talked about, but also if you kind of get a double, right? So if you're trading at 350, 360, and you get to $7, that's the way to go, because you're almost never going to get 10 unless you carry it all the way to expiration, and that's just too much risk. So these are kind of the things to think about as you look and take targets. All right, guys, I hope you're having a great weekend. Out here, God, the fires are just crazy. I mean, the smoke is everywhere. Went on a long ride this morning, really cranked it out, but I came back and I felt like I was in a pool, right? I had all this, I felt like I had all these things and irritants up my nose the whole time. So, be safe, be healthy, and take care, and we'll catch you on the flip side.